My mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What is good, everybody? It's your boy Reckless Ray De Niro, and we are back at it again for our portfolio update for the month of July 2026. The numbers are in. Obviously, put this off a day. Need a little bit of silence yesterday, a little bit of rest. But having that said, we are going to jump right into it. Before we get into it, let's go ahead and get the housekeeping out of the way. Don't forget to like, share, subscribe. For those of you on mobile, don't forget to hype the video. And if you aren't subscribed yet, hit that subscribe button. Tap in with me. Also, don't forget to leave me comments down in the video below. I do look at them. I do answer them. I reply to all comments. We got a small community over here. I make this for you. If you got comments, drop them on me. We are going to jump right into it. Let's go ahead and add that to the stage. Obviously, giving the receipts for the portfolio. For those of you who are catching the shorts, these do get clipped up eventually and get put out into the ethosphere. Our primary place of showing this content is YouTube as it sits right now. As I get better at this, as I get these a little bit more concise, as I rant a little bit less, I might start uploading full episodes onto Reels. I've been kind of testing that out. So those of you who are tapped in with me over on Facebook might also get an opportunity to share in the greatness. But I do, actually Facebook and Instagram, but I do drop my links for all my stuff. So for those of you who are tapped in, tap in. One of the things I do over here that I know a lot of other content creators, especially in the financial space, where you can, I guess, fake it till you make it or what have you, do that I don't do is I actually show my receipts because I have small portfolios. So we're going to just go ahead and do the rundown. These are the numbers. This is what it is. The too long didn't read of it. The portfolio overall, we are down $1,637 in total. Income was up $569, though we had a $4,000 month, which is awesome. Our goal is $5,500. And after we get all of the portfolios, the different income flavors of portfolios that I'm going to have set up and running, we will be generating over that number. But like from a core standpoint, cut to the quick, I can live my existence, have all the fun that I want, do all the stuff that I basically am doing right now with a comfort buffer. $5,500 a month is what I would need passively to be able to, for me, that's a darn good life if I've got that much money to throw around, because I'm not spending that now. Starting off with the in-home banking. Let me go ahead and get the banner so that people know what we're looking at. We're looking at the in-home banking right now. And then let's micro machine me. I actually like the other way, but I don't like that. Nope. That's the one. Okay, I do like that better. That's the view we're going with. So our in-home banking, we're still sitting. We got a little bit of cash in there, like a very little bit. We have not started building this portfolio out, so we have everything that I have condensed down more or less. And yeah, so we got a little bit of Chippy, a little bit of LFGY, and a little bit of YBTY in here. We're looking at, I might actually be mixing this up a little bit. We'll see. But this is kind of what this looks like. There's $192.29 or $193.67 in there right now. We are up 3.2% because there's nothing in this portfolio. So now that we got that out of the way, moving on to something a little bit more exciting. Now, this portfolio has been getting a lot more exciting, actually. We've got our long-term investment portfolio, which we are now up to $14,545. Obviously, with a lot of volatility, we have $5,000 in margin pulled out of here. I had a put that got exercised that was done in margin cash. Our actual market value is $20,041.49, which is pretty awesome. What have we been doing in this portfolio? Obviously, we bought 100 more Strive. I'm sitting on it. I'm gonna hold on to that probably until we get to about a 50% gain. Then I might sell off 50 shares. But I think I'm thinking I want 500 shares of ASST is kind of where I'm sitting at. I don't know. The CXYF, that was an experiment that has gone horribly bad. It was done with about $100, whatever. We got our Meta Planet. We are actually back in the green a hair on this one. I am probably going to try for 1,000 shares of Meta Planet. I do want 1,000 shares of Meta Planet. I might as well have 1,000 shares of Meta Planet. It's around $1. Obviously, Bitcoin play, big deal for me. MSTR, we're up to 54 shares. I want to get to 100 shares so I can start wheeling this position and writing some calls to generate a little bit more income for the portfolio. That's kind of where I'm at with that. We'll see. We're getting there. We're climbing surely but steadily. We are down 16.51%. Everything sub $100 is a blessing. I am buying every 2 weeks at minimum, semi-regularly. We'll put it that way. Next, we've got PER, which is off Hyperliquid. We're down 5%. This one's a mover and a shaker. I do think that I'm going to shoot for getting about 500 shares of Hyperliquid. Buying any and all dips when we get down about 5%. We'll start looking. Obviously, I have a put call for Hyperliquid. If it hits $5, we'll see what it does. That would draw out of my margin, which I do have that amount of margin available to try to get this up to 250 as soon as possible. We have a few shares of SATA that we're sitting on as a cash position. That is, we're sitting on it. Got about $400. It's back up to almost par. Loving that. We threw some chippy in here, which is down 14%, but we were looking at getting a target allocation of around $5,000. So that's where that's sitting. We're adding a little bit at a time, buying the dip on this side of the portfolio. We also have some Mars in here for our space exposure. We're down just about 20% on that. We've got a couple of shares, so we could still buy some more. I'll probably try to get to 100 shares. Generally, what I like to have is 100 or more. We have YBMN, which is our Defiance Bitminer option. I sold my Bitminer holdings position to get income coming in. Seems to have been the play. We're up 8.28% on that in this portfolio, which is awesome. That's not including the dividends, which that's always nice to see that in a positive fashion. We're throwing a little bit more in here, so this will eke up a little bit. I am considering going into a 500 share position on this. These positions down here, excluding Mars, are mainly to just start chipping away at this margin, and chipping away it is doing. Every week we get a little bit that goes in there, get a little chipping away at it, and no complaints at all. Moving on to the coup de grace, our primary income portfolio. This is the one that does all the work, all the money. Let's talk about it. So as it sits right now, and then this, we will have another proper context being the snowball analytics, but I like to show the receipts first before we get over there. Our market value, we're sitting at $62,546.94. As you can see, we're sitting about $27,000 in margin. That is correct, $27,000 in margin. Because we live out of this portfolio and we are actively moving over our consumer debt into this portfolio a little bit at a time, allowing the margin to work as more or less of a garbage disposal and just chum up this margin balance. Now we have been moving over as much as we can. Now that we have the buy spigot back on, as we are under contract for the next 12 months, we got some money coming in. We're going to be back to speeding this up, because before we were just managing, we had about a month and a half of retirement-esque living. So we were just living out of the portfolio as an experiment to see what we're looking at. And, an opportunity came to me and I took it, because, there's only so much skateboarding and going to the gym, that being the schedule, that one could handle. And, now that we're back, got a little bit more structure and a lot bit more money coming in, we're going back to fully invested. So this portfolio will be getting built back up. Obviously, we have a target of $65,000. So as we are building back up towards that amount, before we then can move into the in-home banking portfolio, where we can start building that war chest over there to start paying off some bills. Let's talk about our positions in here. We obviously have SATA cash position. We got 10 shares of SATA. We got 9 shares of STRC. I'm still waiting on the ability to reinvest SATA. Every time I do this, will not let me reinvest my SATA position. I pretty much buy whichever one is more on sale than the other one is. And SATA is basically at par, so we'll be buying more STRC because I have that set on drip and it is sub 100. So whenever we get back to getting those cash positions flowing again, we'll be looking at doing that. All right, down to the workhorses. We got our AMDY. We are at 283 shares. Obviously, AI, memory, chips, no brainer. One of the popular narratives. I don't think it's going away. This position within the portfolio, obviously, we'll give the context on this and see where we're actually sitting with it. Is it down about 15.7%? AMD had a horrible earnings. Didn't go the way that we wanted it to go, but I did not buy into this position based on one earnings. I'm planning on holding it for a little bit. Obviously, I got like 12 grand in there. So that's a position we are still adding to. I kind of want to try to get it till about 500 shares. It'd make me happy. Chippy, we've been eating off of a little bit. Every time we get to about 10,500, after watching the run up and the run back down, I am scalping at between $500 to $1,000 off Chippy and reallocating it into AMDY and Misty, actually. Or ulty if it's down. It just depends on where we're sitting. But ulty is actually in a position where it's about to probably get clipped a little bit, because I'd prefer to have a little bit more Misty in the hopper than ulty, or AMDY than ulty, because it's a higher pair. So we'll see. We'll see where we are sitting towards the end of the week. I've added Dreamy, which is memory specific, because Chippy is chips. We want memory also. Chippy, it's semiconductors and all that stuff. I want memory also, so it's kind of a counterpart to Chippy. We're down 10%, but we're also still dollar cost averaging. We want to get to at least 100 shares. It's a weekly payer from X funds. The only reason I'm not rushing these is I only have so many positions that I can't borrow against. And for this portfolio, we have Dreamy and May. So I'm very not in a rush to flood money into Dreamy, because that money doesn't get to go to work. I can't use those dollars multiple times. That's kind of a black hole for me. So as we're building Dreamy, it's getting built a lot slower than some of the other positions that I have. Next up is May, which is graniteshares. Obviously, grinding sideways market. This is a good performer. It's a great payer. And while it's doing that workhorse position instead of having all the eggs in the Misty basket and not being able to fully capitalize, because Misty, as we were grinding sideways, was paying a little bit less. May was paying heavy during that grind. So we added in May to counteract that, obviously both based on MSTR, which I'm buying like crazy. Bitcoin, obviously, another one, buying like crazy. That's why they're in there. Obviously, crypto, Bitcoin specifically, is kind of my foundation for my entire financial structure. So I don't have problems riding the volatility on MSTR and making some money off it since I'm holding the stock and buying the stock anyway. Next, we have QQQY, which is a leveler for our portfolio. It is exposure to the entire NASDAQ, and we are making money off the entire NASDAQ volatility. Currently in the green. It's been one that I've been buying. I'll cut into it a little bit. I'll actually cut into it before I cut into STRC or SATA. So that's been sold off a little bit. We've been buying back in a little bit. It's actively being used as we're going through this market that is up and down. And when it's down, I try to take those opportunities to get more into positions that I'm going to be keeping and I'm long-term on. Next up, we have ulty, which is obviously the yieldmax ultra option income strategy. It's my favorite out of all of them because you can borrow against it. We're sitting at about 60% annual return in the portfolio. It says I'm down 18.72%. It's a little bit different, obviously, when we add the context for Snowball Analytics, but I'll explain that when we get over there. Sitting at 386 shares. It's over our $10,000 fully positioned marker, which is why I've been looking at it potentially to clip. It's sitting right under 10.5. When it gets to 10.5, we might sell off about $500 worth of shares and move that into Misty and AMDY and maybe a little bit into Chippy. We'll see. Last but not least, we have Winter, which is a workhorse. We just started the position. We throw a little bit in here every time we're reinvesting. We can't margin it, but it's a hedge against poor performance from MicroStrategy. Obviously, I am heavy involved in MicroStrategy. I've got over $20,000 tied to MicroStrategy's volatility. I'm owning over 50 shares of MicroStrategy. So there's got to be a little bit of a hedge in there. So that way, if MicroStrategy gets beat on, even though I'll be buying, I'll also be capitalizing on that volatility too. I want to make money on both sides. And since I'm all wrapped up in MicroStrategy, I actually might make a theme portfolio based on this play because why not? But that way I'm making money on both sides. So that's the income portfolio. That's where we're sitting. Now we're going to jump over to the fun part, where we talk about the context. So over here, we're going to go ahead and do one more refresh on this. We are sitting at the numbers that matter, the total value, which this is also pulling out the margin, has us at $35.99.90. Obviously, looking at our portfolio, we are at fully board, $62,546.94 if you remove the margin that's being the margin float. This is a number that matters to me. Next, the total profit. Now I'm good as long as we are under 10% in the negative. Now, the reason I say that, because people will be like, oh, you're just losing money. Well, that's one way to look at it. But for me, it's what are you doing with the money? Because I'm not one of those set and forget people. I actively manage my portfolio, which means I'm actively using that money. So while I'm also making the passive income of 67.94% a year, I am also paying off consumer debt, which is 20+%. So that's guaranteed lock-in on 20+%. If I did not have the consumer debt, there would be a lot of reinvestment going on because I don't spend all the money that comes in. The passive income ratio, as my portfolio has grown, I've started dialing this back to help lower the volatility. What this gives and what this yields an additional $42,493.47 being projected as it sits right now, as of the latest payouts that come into me. I'm in control of that money. Hits me first. Also, most of it's return to capital, so there's no capital gains tax on the vast majority of the way that I make my income this way for about another, I'd say 8-9 years. The other thing is, once there are taxes, dividend income is not taxed as much as W-2 income, so I'm still coming out ahead, and obviously not living hand to mouth. Having to pay taxes on my distributions really isn't that big a deal because I can pull that out of the margin, out of the portfolio at any given time. Again, not that big a deal. So let's jump over to the context. Obviously, for this portfolio, we had a goal of getting to about $60,000 a year. We're 71% to that goal. We are in 2026. It has us being projected to hit that goal in 2027. It always projects it a year out. For some odd reason. It's probably because of the way that the portfolio is growing. But you can look at the dividend growth here. And every month, the only month that I think we're going to have a problem beating the dividends is 2025. We did a portfolio shift where I rotated my dividends in that month. And so that's going to be a month to beat for a long time coming. Like when we beat August of 2025, that was a masterful month because I rotated my portfolio throughout that month, and it just gave me crazy dividends. It was actually an accidental work of art. We were almost at $5,000. We did $4,866.36. That's the only month out of the year that I don't think we're going to beat. But you can look in January, beat it by about $800. February, we beat it by about $800. March, we beat it by, what's that? Like $1,200-$1,300. April, we're up over $1,000. We're just stomping 2025. Even in May we did a really good job too. Almost beat it by $1,000. That's awesome. June, we did beat it by $1,000. July, beat it by $1,000. So as you can see, every year this income is going up in a notable fashion. I mean, definitely more than the raises that we get at our jobs, right? Or for those of you who get raises at your jobs. I do now because I negotiate contracts. So I used to not. So, and that sucked. So yeah, August, I don't know if we'll beat it. We will see. I mean, it's not going to be without effort, but it is what it is. After August is a metric month for me, because once I beat August of 2025, every one of these other months should have grown so much that it's going to start getting a little bit ridiculous. So then we will move on to the calendar. Where's my calendar at? Portfolio. Oh, there we go. So we go over to the calendar. So what we're projected, we're looking at $42,471.83, which puts us at monthly about $3,500 on average. Now, obviously, these months, based on how many weeks are therein, are up and down because of how many weeks you have to accumulate money. The thing is, hopefully, if done correctly and the markets and the market wins are at our backs, we can, as we're buying in, because every 2 weeks now there's a cash infusion that gets fully invested. We add that to the portfolio, which then bumps up how much you make throughout the month. So this number is going up because we will be getting at least 2 paychecks every one of these months, and some months we'll get 3, which will be awesome. And we will continue to build and push in to these months to run these numbers up. Our goal, obviously, is to be at 5,500 every month. But with that said, the actual realistic goal is to be at 5,500 the short months. If I can get to 5,000, if you can hit your target on the short months, the months with the extra weeks in them, you should have excess money those months, which should be, a special month to hit. Right now, our current metric that we're looking at, our current plateau that we're fighting for, is $4,000. So we're trying to get these short months like November, like May, like February. We're trying to get those boosted up to $4,000. Those are the months that I'm looking at on my target when I'm looking at my averages that I want up to $4,000 as of now. And I think that we can get to that by the end of the year. I think we can. Okay, so let's go to the context. Let's take a look at the portfolio, go to the holdings to see what our actual total profit loss is. So on AMDY, total profit loss, we are looking at 8.31%. Not bad, as long as we just took a nosedive, so that's not bad at all. I can deal with that. Chippy, we're looking at a total profit of 35.18%. Now, the total profit is factoring back in the dividends, because when you look at it in your brokerage account, generally they're not calculating the dividends that you received. Like I said, with this specific style of living, this specific financial strategy, it's not how much you make, it's what you're doing with what you make. Now, if you live hand to mouth, this will be of no benefit to you because you're just going to buy more stuff. But if you're fiscally responsible, financially literate, this can be a game changer. It's a game changer for me. And so anyone who's got my proclivity, if you see the stuff, the moves that I'm making, and they drive with you, this might be a play for you. If you're financially irresponsible and you live hand to mouth, you can't manage money well, and you spend every dollar that comes in, you probably don't want to mess with this because it's going to exacerbate an already existing problem. More money isn't your issue. The fact that you can't manage money is your issue. You got to fix that first. There's levels to this. You can't just start out here if you're financially illiterate. Just saying. Next up, we've got Dreamy. We're down 9.91%. Obviously, only 26 shares. So this position has just started during the AI sell-off. So we're going to go ahead and keep investing in this because I do think it's going to bounce back. May, down 5.21%. Obviously, this is a pure pay position, as you can see, sitting at 96.83% dividend yield. Loving it. Misty, we're still up 5%, 87.21 yield. Workhorse, plus we get that upside on the upswings. QQQY, we're actually up 12.41% when you factor in the distributions. No complaints there. SATA, we're up 2.11%. Awesome. Daily payer, cash position. STRC, we are at break even. We're up 0.11%. I can deal with flat all day if I'm getting paid. Ulty, we are up 1.29%. Winter, we are flat, actually. So winter, can't complain. Not bad for a hedge. Let's go. That is the context. The reason I show the actual portfolio first is because I like to give receipts. These are my actual numbers. This is my actual money. This is the reason that I don't have to go to work. I choose to go to work. I like money, and more money could be even better. I also like going to work, not being talked to crazy, and not being stressed out every day. Those are all nice things. So if I can do all those things in tandem and make a bag, gonna do that because it just adds to the money that I'm already making. But at the end of the day, I don't have to do anything I don't want to do, which is pretty nice of a spot to be in. That level of freedom obviously makes people mad who aren't free, who posture at being free. That's the reason I show the receipts before I show the snowball analytics, because if I just showed the snowball analytics, the episode would probably be a little bit faster, but I don't want anybody coming at me being like, oh, well, like you can fudge those numbers. No numbers are fudged. You got to see the entire portfolio. You got to see that I actually hold those things. And I'm not talking about things that I don't actually hold or that I'm not actually interested in. And we're going to leave it at that. Till next month, folks. I hope you guys got some value out of this. I hope that you're inspired. I hope that you're motivated to start doing your own research, maybe doing some experimenting with, some of the non-conventional means of handling your money as you watch somebody who is just a working blue-collar schlub just like yourself break out of the matrix, break out of the shackles of being disrespected because you have to work here, you have to have this job, you need this money, you got to pay your mortgage. I pay my mortgage out of the brokerage. My distributions cover my mortgage. They cover my car. My car's paid off. The personal loan that I took to purchase my car that's paid off, to pay it off. My brokerage covers that. My brokerage covers my light bills. My brokerage covers everything if I needed to. And that means that there's a bunch of stuff that I just don't have to put up with. Like if it's something that I don't want to put up with, I'm not going to do it. I won't subject myself to things that aren't beneficial to me. That doesn't mean that I can't work. It just means that when you know you don't have to, there's certain levels of disrespect that you just don't have to take. There's certain things that you're able to walk away from. There's certain things that you're able to negotiate that you wouldn't be able to otherwise because you're showing up everywhere with your hand out. A lot of you have to go look for a job to leave your job. I don't have to go look for a job. People call me out of the blue to offer me jobs. And I get to tell them I'm real expensive. And maybe I don't want to work there. Or I don't like you. I'm not going to work there. Like, I don't want to work for you. You seem like you're sketchy. I don't want to work for you. You're disrespectful. I'm not going to work for you. Give me the heebie-jeebies. I'm not going to work for you because I don't have to. Like, I don't need the job. Like, it doesn't matter what you're paying at that point. So, as I document my journey, I'm hoping that some of you kind of get some ideas and start working on your journey, because I didn't just wake up knowing how money worked. It was a concerted effort. It was a lot of focus. It was 10 years of work. And then people get to tell me now that I'm lucky. And it's like, well, you put in a decade of work, you'll probably get lucky too. What can I say? But till next month, people, this has been the portfolio update for July of 2026, the channel's future financial strategies. I'm your boy, Reckless Ray Dinero, and I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.